Uranium stock tier sheet ranked for 2022. I'm going to go over exactly which uranium stocks I think are the highest and go all the way through those, about 53 of those. And remember, this is not financial advice. This is just my opinion. I rank each of them in the exact same criteria, and I'll explain what each of those means. And this can change daily. Go ahead and hit the like and subscribe button below, and we'll just jump right into it. So first off, this is my uranium sheet. And if you want access to this, you'll be able to see this, and it will change, like I said, daily, weekly. Now, I have a specific tier for each company. Now, the purple tier will be my A+, the highest tier. The next is going to be my A tier, which will be green here. And then below that, it's going to be my B tier, which will be yellow. And then orange is going to be C tier. And then red will be D tier, and then white is going to be an F tier. Now, the thing about this is some of the stocks that I do have or I previously had could be in either of these tiers. It does not mean that I'm heavily invested in any of these tiers. This is just my own personal ranking system, as well as going off data out there, like the uranium pounds, how many pounds do they have, and giving them a higher score for if they have more pounds, because that uranium in the future, when it goes up, should be worth more if they can get it out of the ground. But this is somewhat of an unbiased, valuation of these uranium companies, and just giving my opinion as well, like I said, as some facts. And it's really kind of changed my outlook on some companies out there. Now, remember, I might actually buy myself a uranium stock if it's undervalued, even if it's, say, in the C or D tier. Because if I think it's going to be able to go up in the future, then I might swing trade it, or I might be a long-term investor in it, especially if I think management can change. One of the reasons why a lot of the stocks get a higher tier is if they rank higher in each of these categories, and I'll explain what each of those means. So the first one is management, self-explanatory. Now, I give stocks with higher management that is, more likely out there talking about not only the overall uranium sector, which that's what hopefully they are very bullish on, but talking about their projects, and very bullish about their projects, because I've called CEOs of uranium companies that were not bullish on uranium prices. And this to me is, if you're a uranium CEO and you're not bullish on uranium, then you're in the wrong business. So, higher ranked managements, as well as those that are, have found uranium in the past, or those that have got a mine up. If they've got a mine up in the past, then that's going to be really high. Production time here, that's going to be the average, how I see that company getting into production during this uranium bull market. This includes, permits, costs, things of that nature. And this can change on a daily basis as well if things change with the company, if they get some holdups or if they get things approved. The next is going to be media. Now, media can be a range of everything from, do they have a social media presence? Do they post too much social media? Do they post nice updates? Does the CEO get on, social media and gripe out people? And is it a bad thing? So, those are the things I look at. And do they, there are companies out there that don't even have somewhat of a media presence. Their websites aren't even updated. So I give them a rank on that. The next is exploration upside. Do they have projects that can be explored that could have high uranium, content and high value in the future? So obviously explorers usually are going to have that, especially if they're in the Athabasca Basin. I have a higher number for that. I want a uranium company that is going to have an upside on exploration as well in the future. And hopefully the company will buy assets or merge. Jurisdiction, that's going to be not just where it's located, obviously good jurisdictions, the Namibia and, the Athabasca Basin, they've had your great uranium jurisdiction in the, in the past, obviously, but it's also the local level. So is it in, say, the Athabasca Basin? Is it in CDRN territory where there are going to be specific things that need to be done in order to get the mine up? And, if there are tribal members that don't want the mines up, this could dampen it a little bit. But that's what the jurisdiction overall is. In America, same thing. In Wyoming, pretty bullish there for uranium. But if you're, say, in the South, there could be some holdups. 5 being, relatively usually the highest. Now, if it gets a 6, it means it's above and beyond. If it's purple, above and beyond, for that number, something they stand out. And that's probably what I'll talk about. If it gets a 1 or a 0, it means they usually either don't have uranium or there's a problem there. And I can talk about those as well. The next is going to be the cost. This is going to be the overall cost for the project, if it's exploration or if they already have things found, what it's going to cost. And this is just an average, inflation is going to weigh in on that. The next will be finance. Can they get finance for their projects, and what's it going to cost the company? Do they have access to shareholders? They have big, deep shareholders, that could possibly loan the company money. And this plays in part to the future of uranium, if they can actually get a project going or continue drilling. The next will be value. What is the market cap right now to necessarily not just pounds that they have or exploration upside? It's literally like their market cap. Okay. A lot of uranium companies out there, if they're bright green here, in my opinion, that is market caps that I like to look at, because it means I get a bigger shareholder piece of the pie. Now the red ones, they're higher market caps. It doesn't necessarily mean that I'm not going to myself think that that's a good stock or buy it, but it does mean that I'm going to get a smaller piece of the pie. So I want a bigger piece of the pie for uranium. So that's what all this means. And then next to it, obviously pounds here, the higher this number, the higher pounds they have. This is in million pounds material overall. So if they have, nothing yet, then obviously that their valuation is probably going to be lower, and there is going to be a big upside if they do find something. But they don't have any uranium right now, so financing might be harder. It's not going to be as easier to finance, like you can see here, for some uranium companies that are, say, cash flow positive or that have uranium. So this is just, like I said, this is my opinion. It's not financial advice. As you know, I don't sell courses. I don't, tell people ever to buy or sell any stock ever. This is just my uranium coverage, and I, keep track of all this as well as all this other data for uranium, as you can see here, for lots of uranium stocks. And this is going to be my coverage of it for the beginning of 2022. And, we'll come back to this in 2023. If you want access, there's going to be a link in the description below. But we'll first go through this. So the first thing is, most of these are all uranium stocks for the most part that are heavily invested and tied to uranium. Now, they might be on the other end of the spectrum, like fuel part for the U3O8, the fuel part. And that's what the Centrus is here. Now, they're pretty much one of the only uranium companies out there that are doing the fuel, that have government contracts, and that have been in this for a long time. So of course they're going to get a high value on this, and it's one of the highest in my rankings. And this company, the management, the CEO, for the most part, is been in not just the uranium sector, but the Department of Energy. So he's got ties to that. So this got a 5 for me. Production time, they're going to be, like I said, the ones getting these HALEU contracts. Their media, it's pretty good, above average, I would say. And then on exploration overall, when I say exploration for a company like this, it means, they're upside in this HALEU fuel. We already know kind of what's going there, on with these future contracts. So, there's nothing crazy new about this for the most part, but the cost and the financing, it's pretty good for the company as well, because, they're still under very relatively low market cap. And because they're going to be creating this HALEU fuel, this U3O8, and it is down 48% for the year, it is very undervalued, I think, in the most part. And I think this stock is pretty good for me, looking at it. The next one is going to be deep yellow. Now, this one gets a purple, as you can see. Overall management in this is, tier 1, perfect management for the most part. They were the management from Paladin that literally created the first 2 uranium open pit mines in the past 20 plus years. So they became an explorer all the way to producer. So, this uranium company, management is top of the line. John Borshoff was not pumping uranium for years like many CEOs we've seen. He told it like it was, and I respect that. So I give them a 6. Now, production time, 3+ years, that's about average for any, stock there that's in, the Namibia area, about 3 years. And I really think they can get into production. Their media is pretty good. Like I said, he'll go on. He doesn't do too many, overall, they don't post too much stuff, but they do have a social media presence. And I really do like that they update the top 20 shareholders, which one of my buddies, Lewis Morgan, actually is top 20 shareholder. So it's kind of cool to see that that. Now the exploration, they have a good exploration upside. Their projects, Tumas, they actually were able to get more uranium out of their DFS. So they have a big upside, I think, if they can buy other assets. Now they're looking at a possible Vimy merger with Vimy Resources. So this was something good. I do like that. I think it could go to a 5 if they are able to get other assets. Jurisdiction there, very good. I like, the Namibia, the government loves, to support uranium. It's very good for their economy as well. Now the cost and financing, they do have cash, and the financing overall for this company, I believe they could get some good financing. There's a lot of, I think 69% of the float is already locked up by shareholders. So, you got deep pockets in there as well. I think that they'd have no problem getting these mines up. And the value, look at the market cap compared to what Paladin was. I think it's very undervalued, and it's down 37%. Next one of these. Now, I'm not going to literally go over everything for all these, but if they're, if they're in this top tier, I'll talk about them. And obviously I'll probably talk about some of the lower ones down here, but we're going to go over all these. So just sit back and relax. Now, next is Peninsula Energy. I really do like this company. They're a producer and they are cash flow positive. They've got uranium contracts and the management's really good. Wayne, he's been a former CEO of, UR Energy. He's was the former president of the Uranium Producers of America, very knowledgeable guy. He's got, ISR mines up and, running, and the management, there's really good. They've also got Chamberlain, who was the CFO of Paladin that did that 100,000% run. So I do like that. I liked it. They have a fast production time. They said they can get in production less than a year. Now their media is pretty good. They're not, they recently, this number could probably go up. They recently made Twitter, and I told the company, like, why don't you have a Twitter presence? And I do like the CEO too, Wayne. He listened to me when I told him that it'd be nice if he got a new microphone. So this is something good. I think that they could actually grow in this as well. Now their exploration upside, this is something I'll talk about. I do think that they do need assets. They only got 54 million pounds. And although they will, be able to lock in contracts with that, they need more assets, and that could change. That's going to be great for the company if it can. Jurisdiction, Wyoming there, it's one of the best jurisdictions, I think, in America. No problems, no issues there. The cost, the financing, they're cash flow positive. So I think the value with where it's at right now, it's held up pretty good. It's down 11% overall and fast, off the 52-week highs. So it's holding up very well. I think investors can see that. So, I think they have a lot of places they can improve to become a good uranium producer. Next one's going to be Forum Energy Metals. This is something I've invested in, and I really like management. I've called them, I've talked to them for a couple hours before. I think that they do have a big upside. They got like 9 uranium projects, and I really like that they've kind of shifted from their other projects that weren't uranium and rebranded themselves back to that uranium company. Now their production time is all explorers are going to be. It's going to be longer. Their media too, I really like that they update shareholders and they really, reach out on social media. Exploration upside, they have a big upside with the properties, especially that near infrastructure, those properties. The Wollaston project, it's very close near all the, mills. So this, in my opinion, is positive. Jurisdiction's pretty good. That area, especially near the mills, not going to have any issues for the most part for what I see. Obviously cost, it's going to cost money to get those things up and going, but these mills are going to need uranium, and this being close to the mill is going to be good. Financing, I don't think, they'll have too much of a problem with financing, and the value at this market cap, I think the value is very undervalued. And we've seen newsletter shareholders out there tell people to sell in the past couple months. So we've seen this drop 63%. And I even talked to the CEO about it, and he's heard the same thing. People literally that are newsletter writers telling people to sell stock, which is, kind of crazy. But that's why we really saw this drop. I mean, we're in a uranium bull market. It's a uranium company, and they've got big upside. They've got 9 uranium projects out there. So I think it's undervalued. And I really do like the management. They've have uranium that they've actually found, and they've worked with, big companies, and they've got, joint ventures. So to me, very undervalued. The next one's Azincourt. I think it's, management, I think I need to see more from them. Same thing with production time. But as far as their media, they're like one of the top tier. I really do like Azincourt. They'll produce drone shots of a lot of their projects and update shareholders really well. And I really like that. Now, exploration upside, same thing. I think it's got a big upside. The cost, it's an explorer it's going to be a big cost eventually. But if they can find a good deposit, same thing with Forum, I think it's going to be a big upside at this market cap and how much down it is, 57%. Both of these I think are undervalued. So that is my top A+ tier, purple tier for here. This could change. They can move up and out of this. But, overall, I think that those stocks, those are on my radar for sure. All of these stocks really are, especially, in the green or purple tier. Next one is the A tier. I think these have big upside. I won't go over everything in the columns. I'll probably go over the green or the red. So baseload, great management. They found, the Arrow deposit. They're the CEO. So I think that this is big. And with the overall production time, a lot of these projects might not even come into fruition in time, but it's whatever the market thinks. The exploration upside is pretty big as well. And the last thing, the red thing is obviously cost. And the value, we'll talk about that as well. 46 million market cap. Very undervalued. We've already seen it, it's down 48% off the high. So this is something big. Next one, Energy Fuels. This is going to get a top tier, obviously. The market cap's a little high. We could say the valuation's somewhat high. Once uranium prices get up there, I think this will improve. Production time, they're going to be faster. Evaluation still, to me, long-term is probably pretty low until uranium gets up there. Financing, they're probably not going to have a problem, in my opinion, with that. Next stock, UR Energy. Now, this one, I do think that their production time, their CEOs actually said, I believe, they could also get in production like within 6 months. I think this stock could possibly merge with someone like Peninsula Energy up here. The CEO, he's the former CEO of UR Energy, the CEO of Peninsula. So I'll just keep an eye on that. The next thing is they actually have, I think, they could get financing pretty quickly. They have 41 million pounds as well. And the market cap's not too bad. It's, 280 million. And it's down 39%, so not too bad. Next one, Denison. Anything that just jumps off here, for the most part, I think that they're going to not have a problem really with financing. It is on the big boards as well. The valuation's a little higher. It's down 36%. We saw a pretty big run. But they do have uranium pounds. They've got those JCU assets recently. I do think that it's still on my radar. It's been a swing of mine. Same thing with Energy Fuels. These have been swings. I do think that, obviously, if they can get those projects up and going, the valuation will probably go up a lot more. Western Uranium, this is one that I initially bought under 70 cents, and this thing ran to $3+. It's down 60%. Now, management here, they don't overpay their management. The management is actually a former CEO of Energy Fuels, George. So I do like this company. I think that they have some issues recently. With their media, I would give it a 2. I think, they don't have enough people, obviously, right now to really push it. And there's, I believe they lowered the warrant prices. And here's the big thing. This got added last year to the ETFs, and then the ETFs are guaranteed have been selling. That's what I think really has been happening. A lot of those warrant holders, probably selling, getting out. Value here is pretty high, I think, with their 99 million pounds of uranium, $50 million market cap, down 60%. I still see a high value here. But that nice run that it had because of the low market cap and stuff with the ETFs buying, it's gone. Next is Bannerman. So CEO, he's a lawyer, I believe. So this is, Brandon Monroe. This company I bought for like a penny or two. And, back almost 2 years ago, I really thought, this, the amount of shares is going to hold it back. But, the company's ran a lot. Now it is down, 39%. I think the company, overall, it's got obviously the good jurisdiction there. And I think that, they do have room to improve. This stock always seems to have pretty strong shareholders, buying back into the company, supporting it. They've got a lot of uranium, 239 million pounds. So this is one that's still on my radar. We'll see how this goes. Brandon, there's a lot of people that follow him, the CEO, and he talks a lot about uranium as well, but he does come from a different background, which is kind of interesting to see, being a lawyer versus, a lot of these people are geologists that are CEOs. So it is different, so we'll see how that, goes. Next is Cameco, the second biggest uranium producer. Now this company, I think, overall, obviously their production, their production time, they get a 5, but where they are lacking, I think in the future is, there's going to be some, in sense, financial issues, their balance sheets. If the spot price of uranium goes up, a lot of people have said this, they do have, a billion pounds of uranium, obviously, but the market cap, we're at what, 9 billion now, and it is down 21%. So, I do think that this will probably still go back up, but these are things I want to look at, the valuation to what they currently are going to be able to get uranium at in the spot market. If it goes up, this could, somewhat hinder them until they get all their mines up and going again. So the next one, Paladin. So Paladin, I'm going to really say that this stock right now, it's pretty overvalued. That's my take on it. Now this is another one I bought for I think it was under 6 cents. And it is, I think it might have been like 4 cents, 3 or 4 cents. But anyways, the stock here, the production time, pretty fast as well. The valuation is really where it's at. There's a lot of shareholders. They do have a lot of uranium, getting into production. It's not going to be a problem. But, for me, it's so high valued right now. And I think there's a lot other plays out there that I might play long term versus me getting a new position now. So that's my A tier. Now, like I said, some of these stocks, if, just because they're in the A tier doesn't mean I'm going to necessarily be looking at it myself. I could be looking at some of these down here. Next, we're going to talk about Sprott Physical Uranium Trust. And one of the main issues is I'm waiting for this New York Stock Exchange listing for them. Now, I think that because they have this much pounds, they've got, I believe it's 43 million pounds of uranium. Now, this is already made fuel. Yeah, so, these are in containers. So I put a higher value here, obviously. 43 million pounds is going to be a lot higher because it's already out of the spot market. So this is pretty big. I think management, they're doing a great job. Production, they can literally raise that money and buy it instantly. This is something that gets a very high value. Like I said, jurisdiction, this is going to get a 1. And what I mean by jurisdiction, the SRUF ticker, which is the American version, they're PFIC. So this means that until they get that New York Stock Exchange, it's got a lot more low volume. That's why you've seen it drop 22% off the 52-week high. The volumes drop, the spot market, there's less pounds being bought, or less shares being raised, so they can't buy as many pounds as they were in, say, September into October because of that. So once they get that, I think, in a sense, jurisdiction to me means their listings. So this New York Stock Exchange is going to bump that up a lot. This is something I see very bullish for the market. And like I said, the PFIC, there's tax implications that this stock has that a lot of non-Canadian investors, including myself, I sold the stock last year because of that. There's more taxes, you're going to be taxed higher. You gotta obviously talk to your tax professional on that. But that was one of the main reasons a lot of people sold. And that stock, once that comes back, I think this will jump back up likely, once it's got that New York Stock Exchange listing. Valuation, it is still pretty high, but they've got all that uranium. Uranium price goes up. It should go up as well. We'll just talk about is Fission. They've got some great assets, really good management. I like that they put out their results out very quickly. They're really good with media, but the valuation right now I think is pretty high for something that it's going to take a little ways to get that uranium out of the ground. And this dropped 30%. That's my Fission. I think it's a great, they've got some of the highest graded assets out there, but it's still, those are some things I got to look at. Now, EL8, Elevate Uranium. So this stock, for the most part, it's average. I would say the valuation for where it's at for, 114 million pounds of uranium in a pretty good jurisdiction. I would say that this one's going to be pretty undervalued, for the most part. And it's going to take obviously some time probably to get production if they can make it during this uranium bull market. But I think for this valuation right now, for this market cap, it's pretty undervalued. Next one, GoviX. So GoviX, overall average on most everything. I think it is pretty undervalued still with the amount of uranium that they have. Now, I believe some of these stocks, specifically, I think GoviX, another one that had some warrant things going on. Warrant prices might have been what was holding it back. But, they got a lot of uranium. It's down 40%. Stocks like this, you can see a big rebound, I think, especially, when they're over 40% down, like a lot of these are, I think that there is big upside for sure. but is very volatile. Fission 3.0. Now this one, for the most part, they've had some issues in a sense with management and some smear campaigns and all that. Overall, I think the company has a big exploration upside, but it's going to cost a good amount of money. Now the valuation's still there. They've got a lot of great assets. Great assets there in the Athabasca Basin. High chance, high grade uranium, but the market cap very low. It's still down 25% off the 52-week high, so it's still somewhat undervalued. Now, like you see, these numbers aren't too far apart. If they get, say a red or a white in an area, they've obviously got to improve in those areas. Obviously explorers got to find uranium. But that's kind of my take on Fission. Jump down here. We'll go down to 92 Energy. Now, this is a new uranium company, so I do like the management. And I think that it is one of the only female CEOs out there, which is kind of nice to see. It's a different, obviously, you normally don't see this in the mining industry. So I do like that. I've already found some really nice targets out there. So this is something good. Obviously, there are going to be costs with this company. And I think that, going on, this company can see a good valuation in the future. They're down 45%. It ran ahead of itself. Still got a $48 million market cap. It's a new company out there. It's got to prove itself. Encore Energy. So this is one that, has been doing some M&As recently. Overall average, I think this company, they get a 4, I would say. This probably would have got a 5 and bumped it up. The company itself, I think once they do tweet a lot. So they tag me in a lot of tweets. Sometimes it's related to uranium. Sometimes it's related to other stuff. I think that the valuation somewhat still high, 112 million pounds, it's down 31% as well. I think with the M&As and things, a lot of these numbers can improve, and they'll probably bump them out of this eventually. Lightbridge. So they are on the fuel side as well, kind of like Centrus. Now they are on the bottom side where you kind of see this fuel assembly makers, and they're really the only ones really doing this for the fuel cycle for HALEU. So obviously their media, they're pretty good. They trade on the big boards. I think cost and financing, and obviously they don't have this HALEU. They're not ones making it. It is going to be somewhat holding it back, but its valuation, you can't deny. It's down 56%, and it's got a $49 million market cap, and it trades on the big boards. Pretty undervalued for the most part for me, but it is still risky for me. If uranium and HALEU things go up, obviously this stock's valuation's got to go up. Global Atomic. So this one, a pretty high valuation. Now they've got a lot of uranium. In no ways I think that this company deserves this tier, but that's just where it ended up. I think it really ended up this way because of the valuation. I think it probably, it got ahead of itself as well. It's down 27%. But at $415 million market cap, it's trading at 288. Somewhat a psychological number for a lot of investors out there, especially if they're in uranium and they see other ones trade under $1. On the OTC, it might hinder it a little bit. The market cap is a little higher. So I think these numbers all can improve, obviously, and can bump it up out of this eventually. We'll see how things go. I'd like to see more media, obviously, from the company as well. If it gets a 3, it doesn't mean it's bad. It just means I see less of it possibly as well. Now, if it gets lower than that, then it means there's probably a problem. Consolidated uranium, everything's pretty much average here. Nothing stands out here. The valuation's still pretty good there. It's not really that far down. They got 69 million pounds of uranium. And like I said, this falls into the average. I've seen a lot of people talking about it recently. So, I probably will keep an eye on it. Boss Resources. Now, I just noticed this in here. I actually had a 2 for management. That's actually not where that should have been. This one, probably, I think I averaged this about a 3. So this actually bumped them out of this tier. The only thing is the production time. I think it's a lot faster for this company. And the valuation's a little high for the company, down 41% still. They're one of the ones that did a split. So, when you trade on the OTC still like this and the price goes up, it can really kind of skew things with investors. Management, I consider, somewhat average. This is, pretty average. We'll see how things go if they can get, them actually into production. 4Cs Metals. So the management here, like, the stock gets a lower management. Need to see more from this company. Specifically, I I really don't see too much about it. Now, I think the market cap, being 127 million, 127 million pounds, it kind of jumps right into that mid-range. I've seen a few people recently talking about it. I just think I need to see more coming from this company. If I never really heard of the management, if I don't know who the CEO is of these companies, then, there's probably a problem in a sense with their, not only that, their media, but, this maybe will be bumped up soon, maybe because we're now in a uranium bull market. This could change. Next one, Lotus Resources. Now this stock, it's pretty much overall average and everything. The market cap's a lot higher. Now I had bought this stock I think maybe actually it was the end of 2020 when its market cap was very small. It's still down 26%, but 38 million pounds. I think this company, it's a great company overall average, but I think that they got to step some things up. I think they need more uranium to be obviously at this range, 336 million. So being overvalued, that's why it's down here. UEC, now this will probably change, but management, a lot of people this is what the overall market consensus is management has, through the years with uranium going down, maybe overpaid themselves, and investors didn't like that. Obviously, diluted investors don't like that. But overall, I think the Uranium One assets that they've been doing a big media push. You see it everywhere. I saw hundreds of, articles or, news articles on them, or they were on YouTube channels, investing YouTube channels, where they were kind of like talking about the stock. So, with a valuation like this, 887 million, down 42% still. It's kind of in that mid-range. I think if management and things can really turn around, they get into production and stuff, it might bump out of this, but for the price it is right now, I think it's kind of a little overvalued, especially when it was up 42%. Next is Mega Uranium. Now, I believe there is rumors that this might be a PFIC. Now, I'll talk about PFICs in another video. It's the same thing as Sprott Physical Uranium Trust is. So if they're holding a lot of value in other companies, which they do, like NextGen, they have shares in, and other companies, then it could be a tax issue. So I think it is pretty undervalued at 87 million. It is down 26%. I put this 500. They don't have that many pounds, but they are in companies that do have a lot of pounds. Obviously, like NextGen have a big portion of their company. I think it's like 16%. And remember, all this stuff is pretty much in a one take off the top of my head. Like I said, I live and breathe uranium. This is just my opinion. But I think that, the name Mega Uranium, a lot of people will probably want to invest in it. $87 million market cap. It's probably got a pretty good upside, but it still falls into that mid-range. Next is Standard Uranium. I think management's really good here for the most part. New company, that's why, the production time being Explorer, the cost financing, it's just going to be low. They don't have pounds, but their media and exploration, it's this will probably bump them out of this, but they've dropped 56%. I think they kind of got ahead of themselves. $15 million market cap now. It's crazy. But a lot of investors, I think, jumped in thinking they had some drill results that weren't as good. But I mean, it's an exploration company. They got other, sites that they're going to be exploring on. And, we'll see where this goes. But I do like that they update their shareholders. They put out media. They've got upside. Management's pretty good. I've talked to the CEO on Twitter before. But like I said, production time, cost, finance, these things, in its value, it's down 56%. Maybe this number will go up a little bit, probably bump it up, especially once they start drilling, again. Next, UEX. Now, management, overall, when the overall market, complete shareholders continue to say that, management, there's issues. They didn't like the way that JCU deal went with Denison coming out, talking about it too early. A lot of people didn't like that. I think that overall, it's above average in a lot of areas, even maybe undervalued, but it is down 44%. They got 150 million pounds plus. They got 50% of that JCU deal, but I think until this management changes, they won't bump up to this, tier. If management changes, they might bump back up to this tier. I think, it's going to take some time. Can these assets, can they get them out with the management they have? Next is NextGen. This one, I think their exploration upside, they've already got the biggest deposit, pretty much biggest upcoming deposit. Uranium won't come out of this deposit in the next, 5 years. So exploration upside is pretty lacking. The value at the market cap, it is $2 billion. It's already down 29% compared to some of these other ones. I think it's pretty overvalued right now. This could change, if they buy other assets and they can get the uranium out. Obviously that'll change, but it's hard for me to value any higher when its market cap is this high. And they're not, 338, million pounds of uranium. Yeah, but you got to get that uranium out of the ground. ISO Energy, this one's a higher price stock. Market cap's not crazy high for the price of it, but I think that their production time, it's a big thing. Obviously, the value, little uranium, little pounds, obviously. The value is kind of over high, and it's down 43%. So a lot of investor capitulation. So we're kind of in this lower, obviously lower C tier. But that could change. We could see how this goes. They've got some good assets, good areas. We'll see how it goes. Next one, Vimy Resources. This got a 2 in management because 7 of their lead managers, the mine builders, left the company. So, when that happens, when you're in a uranium bull market, there's something going on. And it could be because the projects there, like they are in somewhat of a good jurisdiction in a sense because they've got supposedly their permits to get the Mulga project up. But, there is opposition to that. So we'll see how this goes. I think $230 million, down 29%, still very overvalued. I think a lot of people, because Deep Yellow did an offer to merge, they're still holding on to it, thinking that they could, gain, obviously get Deep Yellow shares. I think Intel, their management, they can, get things going, in a couple years with that project or merge. This will bump it out of it, obviously, if it merges. Now, getting into the red, this is the D tier. Now, this does not mean that the stock is bad. I might buy a D tier stock, especially because the valuations are probably going to be better for the most part in a lot of these because it's a lower market cap. You can get more of the stock, and it's down a lot of investor capitulation. Now, specifically with these stocks, a lot of these are probably, like I said, lower market cap. They might not be a pure play uranium company. They got to prove themselves. Now, majority of these, for the most part, I will kind of say they're average. They've fallen into this category. Now, obviously, URNM, if we're talking about these ETFs, to me, it's lower value for the most part as of right now, especially if they're down, they're going to have to be rebalancing. If they bought SPUT, this one sold a lot of their SPUT because they got to pay out the dividends. Just, some things that's in the lower tier for me. Next one is Sky Harbor. Production time, little uranium. This is another one down 29%. I just don't see it, being valued any higher at this point, especially because, it is a higher priced stock, even though the market cap's 79 million. I think that this, they got to kind of prove themselves a little more, just bump these numbers up in management. Obviously, I need to see more from them. ACAP's another one like that, average across the board. They do have higher uranium count, obviously pounds, but they need to get that, that market cap's pretty high. They need to get things going. I need to see more from the company. So PurePoint Uranium, this one gets a higher on the exploration side, obviously good location, but the cost and financing, this is going to cost a lot more. You got to see where these are located, and people are like, why is this not ran? Why is it a $32 million market cap? Why is it down 50%? They don't have uranium. Exploration companies, some of their projects, where they're located, does it fall into that CDRN location? In being such a low valuation, it's probably going to be harder to finance for some of these. When they have a low valuation, or if they're overvalued, in my opinion, it's going to be harder to finance. And, that's where we're going to jump into Alligator here. Same thing. It's good upside on exploration, but the overvalued, 47 million pounds. They do have uranium, but it is down 41%. And I do see this being, it's going to cost a lot to get into production. Next is Toro, very low price, obviously, but the market cap still over 100 million. They got that 91 million pounds. Their media and exploration, I think these two, obviously, they got to improve on both of those. And I think once that happens, this number might jump up out of here. But I need to see more from the company. Global X, obviously these uranium, like I said, ETFs, pretty average across the board. If they're, down a little bit, I kind of see that these don't have value, in my opinion, as high as the leverage of some of these other ones will run eventually. So obviously they're going to fall into this area. Same thing with URC. They're overall average. They're not pure play uranium explorers or developers or producers. They're going to fall into these areas, obviously. Now, Canalaska, this is one where I think the cost as well is going to be, something they need to improve in the production time. These assets, they don't have uranium. $33 million market cap, down 41%. It kind of falls down in here. And like I said, for a lot of these, they could change. Obviously, the ETF, we're going to fall into here. Need to see more from the company media. That's where one of the things lacking to me. Valor, same thing, production time, media, need to see more. 44 million pounds, but $40 million market cap, but hasn't sold down too much at a 41-cent price. Still kind of that lower D tier to me. Valor Minerals, maybe if they change their name to Uranium. Next one, Laramide. Now, this stock, I used to have shares back in, I think, March of 2020. You know, I saw a lot about the CEO, the company talking it up and things of that nature, but I think the exploration upside is pretty low. Their assets really, you know, don't excite me for the most part. I think it's going to be somewhat costly, the financing. 123 million pounds, 91 million market cap. This is why we've seen it drop 42%, I think. And I think that, you know, it's not as big upside to a lot of people. You know, you have jurisdictions, you know, down in the South in the US, I'm just not as excited about it, or Australia. You know, those I'm not as excited about. And that's kind of where it falls. Maybe it'll change. Like I said, the management, I like the CEO, I like what they said, but overall, I'm not really a believer yet. Next, Cauldron Energy. Another, you know, production time, low media, 31 million pounds of uranium, really low market cap. It's down 50%. It's going to cost a lot. It's just way down there. Obviously, you understand why it's down here in my opinion. You know, management, nothing jumps out to me. Same thing with Appia. They are, in my opinion, their media is lacking as well. You know, you go to some of these websites sometimes and it's just not updated and things of that nature. The cost, I think, in financing, it's going to be a lot harder. Now, the market cap in some of these, like I said, 48 million, but it's down 55%. We got 56 million pounds, so this could bounce out of here. I just think that they got to improve a lot. Same thing with Blue Sky Uranium. Production time, media, you know, jurisdiction. The cost, you know, it's going to cost a lot. Jurisdiction, I don't even think that, you know, they're going to have big issues with this. A lot of these companies, especially right now, we're in a uranium bull market and their market caps are still low and they're down this much, 37%, you know, 50%. I think it's going to be a lot harder. A lot of these companies, their assets might not be as good. And that's kind of where they're falling. Anfield. So management, now this company, I used to own this company. And some of the main reasons I sold, the company is obviously an M&A company. They have one of 3 uranium mills in North America. I really like that. 20 something uranium projects. And I like that. 29 million pounds is what they're reporting uranium. The market cap's really low. It's down 55%. But management, they started to sell, you know, they lowered the warrant prices. And the stock had a really good run. And, you know, when that happens, you lose faith in the company. The media, I really just didn't like what I was seeing with the company. Get what you get when management starts selling out and they restructure warrants and, you know, the company doesn't believe in their own assets, obviously. You know, like the companies in here that you see are going up. These 2 stocks, Forum and Azincourt, I believe both of their CEOs were buying on the open market. You know, even if it's small, and these are like geologist CEOs. They're not like banksters. They're not like, you know, battery analysts like, you know, the CEO here. Nothing wrong with that. But it's like, you know, same thing with Bannerman. I think their CEO, like, because of the tax purposes there, you know, he was selling shares. That's just what you get sometimes. To have these geologists buying, that tells me something. And look at where they're at kind of on the tier list. Look at, you know, they've got bigger upside in my opinion. That's kind of the reason why. That's one of the reasons I sold Anfield. And I think that the stock could see a rebound. They've got a lot of good assets. They've got that uranium mill that was paid for $100 million plus, I think, from Uranium One back in 2007. So it's got big upside. But as far as Anfield Energy's management, I think that things need to change. You got to put your money where your mouth is. And, you know, it's not going good for that company. That's why it's kind of in this bottom, you know, D tier. Now the F tier, I've owned shares in Manhattan and U308 back in 2020. And this was because I really didn't know much about these companies. A lot of them, you know, the market caps are just so low. They've dropped a lot, like Manhattan and U308 Corp. And their jurisdictions aren't as good in my opinion. And it's just like everything, management, you know, media, got to up these, you know. Does it have a big upside? Yes, but it's just so volatile. When you become like a $7 million market cap or you're under 15 and you're in gold as well, and you know, you have all, you know, you're stretched out and you know, you got a lot of shares and you're diluting shareholders, it's just tough. It's tough to get financing, I think. And you know, the same thing, I think ALX Resources were a uranium company and you saw a big run, people probably thought this low market cap was going to run. That's why it's down 50%. But if the company's not really doing anything with the uranium projects or they're selling them, we see a lot of these companies do, they're going to fall down here into this. And losses, when you have losses in these uranium stocks, and we've seen some of these 60%, upwards of 70%. So you've got possibly a 233% upside, and some of these are as low as 43% upside, but this is a big range of gains just to get back to where they were. Will this tier list change? Yes, I think that this tier list is going to change on a daily basis with me. A lot of these that are 1s or 2s could become a 5 and bump them way up. You see, the numbers aren't crazily different, okay? I'm not bashing any stock here. I'm not, this is just my opinion. This is just something that I had to look at the company. I had to give it something, and maybe a company that I really like, down here might have got a bad score, and I'm like, dang, like, I just got to be true to this, and this could change, and there might have been, something that, in this video when you see it is already changed. So that's why I've got this sheet. If you want access to the sheet, as well as, I track everything with uranium in the sheet, and it's going to be updated daily. If you want this, and there's going to be a link in the description below. I'm not selling any courses. I'm not interviewing CEOs on here to try to pump a stock. I'm never telling you to buy or sell a stock. The only thing I have is the Patreon for the link for all the hard work I put into research. And if you want to follow that, there's a link in the description below, and you get access to those sheets. You get access to my 2 years of uranium and stock data. And I've been really making a community for investors, and that's really where that's going to be. A lot of great tools in there as well, so you can do your own due diligence and see the 30,000 plus posts of uranium that I put in there the past 2 years, especially if you're a uranium investor, and live updates all across the web from resources that cover uranium. It'll be posted in there. Excited to see in 2023 where uranium has actually gone and how this chart has actually changed. So thank you very much, and until next time.